Good afternoon, traders. It is Tuesday, September 28th, 2021, and the U.S. stock market is closed. We had a crappy day today. I'm not quite as upset as I usually get, however, because it was let's just say it was a normal crappy day, and I'll explain that in a second. Um, we were not well, anyway, like I'll explain that. Looking at the Dow here, the Dow kind of surprised me today. It really took a dump and ended up closing down 569 points, and it looks pretty sick right here. It tried to rally at the end. We've seen that pattern a lot, but then with 45 minutes to go, it just crapped out and ended up closing pretty close to its low. So this was a bad day for the Dow. The reason, okay, we had a bad day too. Okay, we had I think about 10. We had 18 positions. We had about $10,000 positive open trade on the close yesterday, and this morning this thing opens up, and I would as approximately 4 or 5 minutes into the trading day, that $10,000 had gone to 20,000, and I took a screenshot of that, which will be on the website. You can look at it. So we had 5 minutes into the day, we had 18 positions showing $20,000 in positive open trade equity. And 45 minutes later, by the time we exited the last of those 18 positions, we were down almost $13,000. So we saw a drop in equity in the first 45 minutes of the day of over $32,000. So, yeah, that stings. When I say I'm not quite as upset as I usually get about these bad days, is this had nothing to do with hedge fund managers ganging up on us. It wasn't caused by whack-a-moles hitting our breakouts or anything like that. It was caused by just an overall sell-off, in a broad sell-off across the market, and that is reflected in the Dow. So, I know if you lose money, you lose money, but I am somewhat pleased that the Dow is going down and our equities going down with it. I'm not pleased when I see the Dow going up and our equity, we're just getting killed by the whack-a-moles. The whack-a-moles had nothing to do with our losses today. Um, so this is this is what I'm really saying is the pattern here is not the same pattern we've been seeing the last 6 months. It's more the pattern I see when we're doing really well, and we just had a bad day. That's what it looks like. It looks like a bad day on a good streak, okay? And of course, the good streak, isn't long enough to really call it a good streak yet, but I'm still pleased that the stocks are moving more in a way that I understand, and so on. Okay, enough blah blah. We got into three. No, we got into two new positions and one carryover. One was positive, two are negative, and we're carrying positive $6,000 plus uh, going into tomorrow. Now, if you're a trade station trader like I am, uh, I'm trading TradeStation 9.5. You could be trading TradeStation 10. Didn't make any difference. Um, Either way, you did not get positive equity in your open trade at the end of the day, and the reason has to do with a single stock called Elphi Incorporated, ALF, and what I'm showing you here is ProSuite, and I trade that, and then I also trade TradeStation 9.5. And what happened was TradeStation 9.5, or rather ProSuite, got into Elphi yesterday, and TradeStation 9.5 didn't get into it today, and Elphi had a big gap up today. So, in other words, ProSuite got the advantage of that big gap up, whereas TradeStation 9.5 ended up almost buying the high tick of the day. So they're showing a loss. TradeStation or ProSuite is showing a good gain. It's confusing for people. They don't understand. They get mad. It does not mean ProSuite is better. ProSuite oftentimes ends up buying the high tick of the day when TradeStation avoids that purchase. Overall, both the positions or the platforms are about the same, but today, yeah, if you're a TradeStation trader and looking at this video, you're probably a little bit mad because I am showing a profit in ProSuite that you did not get trading TradeStation. Okay. I'm going to show you just one stock today because it illustrates what was going on. As I say, we had 18 positions today, and all 18, I went through all 18 from the time we opened till the time we got out. They all 18 declined in value. This is typical of what happened in all 18 of those stocks. This is BBIG, which is Vinco Ventures Incorporated, and we had bought this yesterday. After about an hour in, it closed with a small loss and then gapped down hard this morning, and that resulted in a $6,000 loss. But please note that this is different from the whack-a-mole pattern, because we're not seeing the whack-a-moles coming in and hitting this when it's up. It was already down on the open or on the close yesterday and just got worse on the open this morning. So it's not a whack-a-mole situation, but it was still a bad loss, and this was symptomatic of all 18 positions we held. Anyway, you do have these days. Trader Bob signing off. I'll see you tomorrow on Wednesday.